In the summer of 1897, word reached Seattle that gold had been found in the Yukon. Within months, over 100,000 people dropped everything, their jobs, their homes, their lives, and set out for a place in Yukon called Klondike. Most of them never even made it to the gold fields. The journey itself killed people. Of those who did make it, the vast majority found nothing. A small handful found enough to change their family's future forever. So here's the strange part. Nobody forced those 100,000 people to go. The opportunity was open to anyone. The risk was obvious. And they went anyway, because the story of the one person who struck rich was louder than the story of the thousands who didn't. Money works the same way. And in Canada, we have a modern, regulated, fully legal version of that gold field. It has stickers, it has press releases, it even shows up in our brokerage apps right next to our blue chip bank stocks. You have and I have probably scrolled past it without knowing what we were looking at. So if you have browsed Canadian finance apps, you have seen ticker symbols ending in a .v. Names like ABC.V or XYZ.V. That .v stands for the TSX Venture Exchange. At its core, it's a public marketplace built for brand new early stage companies to raise high risk capital. In the US, those early stage companies stay private, usually funded by the Silicon Valley venture capital, completely closed off to everyday investors like you and me. In Canada, the story is different. TSXV opens that door for us. So there's a common myth that the TSXV is a mandatory minor league, that companies have to prove themselves before graduating to the big TSX. Actually, that's not true. They are separate doors into the same building. The TSX is built like an institutional fortress. Millions in assets, millions in earnings, broad shareholder distribution required just to walk in. The TSXV, by comparison, lets a company list with as little as $750,000 in net tangible assets, or if they don't even have that, just $2 million in third-party financing. That's roughly a tenfold difference in financial maturity at the point of entry. So a TSXV company doesn't need revenue, doesn't need profit. In many cases, doesn't need a finished product, a proven asset, or a single customer. They just need a story, a legal team, and enough cash to keep the lights on for a year. Now, I want to tell you about the good and the bad of TSXV. So back in 2004, Osisko Mining was a tiny exploration company on the TSXV with a contrarian bet. Old abandoned mining ground in Malartic, Quebec that they believed modern drilling could reveal as a massive gold deposit. Because they were public, they could go directly to retail investors like you and me again and again to fund the drilling. And they were right. They proved one of the largest gold discoveries in Canadian history. And in 2014, the company was acquired for roughly $4 billion. Early TSXV investors who held that position saw life-altering returns. So that's like the Klondike dream fully realized. And now the other side. In the mid-90s, Bre-X Minerals claimed to have found an almost unimaginable gold deposit in the jungles of Borneo, Indonesia. The stock went from pennies to over $280 a share. Then, an independent audit found the core samples had been salted by hand, crushed gold mixed into the rock to fake the results. There were actually no deposits. The company's stock went to zero in days. Billions in retail capital vanished. People who had believed in the company with their retirement funds, everything gone, and they were left with nothing. So same exchange, same structure, same rules. One made early believers wealthy beyond imagination. The other erased everything for people who believed just as strongly. So now here's the question that actually matters. How do you tell before the outcome which kind of company you are looking at? Because how low the bar is to list, TSXV companies tend to fall into one of the two categories that we just discussed. The first spends most of its capital on promotion, investor relation firms, social media hype, a steady drip of news designed to keep the share price just as interesting enough to issue more stock. The second spends its capital on the unglamorous things, drilling, building, developing, and says almost nothing until there's something real to report. You can't always tell from the outside. But there's one simple question that gets you most of the way there. Where is the money actually going? A company that's been public for years, has raised capital multiple times, and has more press releases than drill results or product milestone, that's a flag. A company that's quiet, slow, and occasionally boring, that's often the one actually doing the real work. It's the same instinct that should apply anywhere someone is more excited about telling you a story than showing you the result. 100,000 people went looking for gold in 1897. Almost none of them found it, but the ones who did weren't usually the loudest one beforehand. The TSXV gives you and I, the retail investors, the same choice those prospectors had, except this time, you and I get to look at the claim before we stake our money on it. Thanks a lot for watching this video and see you next week.